Wire. This is a company with a PE of 7, a pile of cash, no debt, and, wait for it, short interest of 18.88%, almost 20% short interest. That's something that you don't normally see. Usually high shorted stocks are ones that, have pretty obvious reasons why they're shorted. The first thing I want to go into here is what makes a good short squeeze candidate, because I think this one does check the boxes. All right, so in general, short interest, and this is just generally, if you Google it, it's like, okay, over 10% short interest is pretty good for those odds. But, the closer you get to 20 and above is like really strong negative sentiment, which could lead to a squeeze, right? But a squeeze is way more than just a high short percentage. It's a lot to do with like how many shares are shorted and the average volume. And I'll show you how to calculate that real quick. So if I go down here, and this is Seeking Alpha, once again, use the link to get a free trial that you can't get anywhere else. Click on that, help the channel out. All right, so trading volume average 3 months is 267,000. The total shares outstanding is 18 million. Okay, so if we wanted to calculate our days to close, I forget what the exact terminology is, but days to cover. That's like how quickly could the shorts buy the shares back if they were matching, let's say, average volume for the day. So like what you do is you take, I'm going to take the 18 million, so 18, 1, 2, 3, and then 0.188% of that is shorted, so times 0.1888 if you remember from the beginning. And so that's 3.4 million shares shorted. Then you're going to divide that by the average volume, so divided by 267,245, and you get that they have about 12 days to cover. Again, over 10 is pretty good, because ideally what you want if you're looking for a potential squeeze candidate is a highly shorted stock with not a lot of volume, because then if the shorts did all try to rush for the exit, like let's say there was some really positive news, then there's not as much volume for them to get through. That's that the exit's only so wide. So that's the sort of thing that I would be looking at. And okay, here I could have just looked here under risk. Short interest 18%, 3.27 million shares short. Okay, so a little bit less, and then 12. So close enough. I got 12.7. They got 12.25. They could have used a different average volume. It looks like they had a different amount of shares short, but you get the gist, right? Okay, so that immediately is very intriguing to me, but what made this even more interesting is the recent movement. So earlier this week, they announced earnings like right here, and the stock tanked, and I thought the earnings were great, and so that confused the hell out of me. I nibbled, and I was moving money to get in the process of like buying way more. And of course, whenever I want the stock price to stay down, which never happens, it rose. So it's crazy. But anyway, I have a small position now. I'm happy that I bought that. I'm hoping I didn't time the exact bottom, because it wasn't really a significant portion of my account. But maybe I'll get a chance to buy later on. So anyway, what I wanted to do is go through some of the highlights from that earnings call. Then we're going to go through the historical financials, because I think that's what a lot of the shorts are looking at for their bear case. And then just kind of the overall market, and that's it. So let's start with the earnings call. Okay, so high level, and shoot, I should have started with this. Their market cap is a little under $3 billion. Okay, so keep that in mind, $2.9 billion. Okay, so their second quarter net income, $100 million. So just put that into perspective. $100 million. If they were to do that every quarter, that'd be $400 million, right? So $400 million on a market cap of $2.9 billion. That's 14% by itself, right? Okay, so that's pretty good. This is what really got my attention, is that the board of directors increased the repurchase authorization back up to a full 2 million shares. So you have 3 million shares short, and the board has approved 2 million share repurchase. And what you'll also see is that you have cash of 600 million. So like they have, look at this, 2 million shares right now at today's price would cost you about 328 million. So you're talking, they have enough cash on hand to do that as soon as they wanted. If I'm a short, I'd be terrified of that. Like, what's stopping the company from just buying it all at once? But anyway, that's don't know why you'd want to short that. I can see why there might be a bear case. You might want to stay away from an investment perspective, and we'll get into that. But the short makes no sense to me. I won't go through some of the details here, besides the fact that, and we'll look into this in more detail. The big thing is that gross profit was down to 26% compared to 38% last year, and this company is going to be driven by gross profit, and that's just the nature of it, right? They are a wire company, like the ticker says, and what they do, and the CEO or whoever was on the earnings call uses this terminology. They just change the shape of copper, right? So copper in, wire out. There's other stuff, but that's, to simplify it. All right. I'll also link the earnings call transcript, but you will need a Seeking Alpha membership, I think, to see this. But there's other ways to get to the earnings call. You can listen to it, but I love reading it. I feel like you can kind of breeze through some of the stuff that's just repeat from the earnings release and then go to the Q&A session. There's a really good question that not an unidentified analyst asked them, which was pretty much like, hey, how do you feel about all these shorts? Yeah, here he says, if I could ask a taboo question, does the company have any dialogue with these entities, individuals, whatever they may be, that short the company's stock? And he's like, why is there such a large percentage shorter? That was my question, right? Who are these people? And Brett responds with, yes, we talked to him, and the challenge is that they're just looking at volatility. Their stock went from 40 to 200, in a matter of a couple years because of some of the commodity booms and stuff and the COVID supply chain restrictions. So I think the shorts are just, practicing the age-old adage of whatever goes up must come down, right? So that's not always the case. We're going to get into that. Anything else? No, I'm going to go through some of the earnings are in the release. So first off, look at the balance sheet here. Their total current assets, which is cash, accounts receivable, inventory. So this current assets is either, like, the rough definition is cash or things that are going to turn into cash in the next year. So about $1.3 billion of cash. Total liabilities, so not even current liabilities, not even, just all their liabilities is $200 million. So you're talking about $1.1 billion of current assets minus total liabilities. If you use that adjustment on the market cap, it's crazy. You're, 2.9 billion, let's say minus 1.1, you're kind of adjusted enterprise value, if you will, and it's not real enterprise value, but that's kind of how I think of it, is 1.8 billion. So if you're making that 400 million that I talked about earlier on 1.8, now your internal rate of return, like it starts looking really good, right? But anyway, that's what I wanted to go over with the balance sheet. Let's see what else is there. Oh, look at the treasury stock. They bought $250 million of stock in that 1 year period. Yeah. Anyway, that's crazy. The other thing that I like here is how they line up their expenses as a percentage of net sales. And one thing I thought was really neat is that you didn't see, and you can look at historical as well, and if you listen to the earnings call, they touch on this. SG&A, a lot of times you'll see companies, whenever they have an up year, this grows disproportionately. Like, somehow the administrative side and the sales side gets way more money than I think is proportional, right? And you can see here that they're, straight 6% of revenue, so it's going to go up and down with that same revenue. I think that's really interesting. And you can see the gross profit 26% versus 38%. And what's a little scary about that is that small changes in gross profit can really carry down a lot to the bottom line. And we'll go over that, I think, whenever we talk about the historical performance. But anyway, that's all I have for the income statement. Let's look at the historical performance of Wire. Okay, so I'm back to Seeking Alpha. I'm going to go to the financials, and I'll keep the latest on the left and just show you gross profit. Okay, so I'm going to do percent of revenue because I think that's really interesting. Annual. So here's December 2022, 36%. 2021 was 33%, but then look at this, 15%, 13%, 14%. Okay, so big difference. And I know that you might be thinking, oh, that's just half. So they were making half as much money, right? No. So look at what their operating income did. And operating income for them is a pretty good estimate because there's not really any debt and stuff, so you can use that as a shorthand for pre-tax, let's say. $700 million of operating income, trailing 12 months, 900 in 2022, 700 2021, and then down less than 100, 70, 99. So, I mean, you're talking they almost 10x their operating income. So, I think that the shorts might be seeing that, and they might be right, to be honest, and say, hey, look, this was a special scenario where this happened, and they're going to be coming back down to earth. I mean, look at the graph of the operating income. Okay. Yeah. It's a little bit spooky. So one of the questions I'd like to ask is, what would trough earnings look like? Or what would a trough stock price look like? So let's say, I'm going to bring the latest back on the left. So let's say that they keep their revenue, that they're not going to drop all the way down to 1,200, 1,300 because they did invest in growth and stuff like that. And there has been some inflation that's going to stay. So let's say that revenue is going to be $2 billion, moving forward. And that gross profit, not the 15%, but let's say 18%, okay? That's arbitrary. You can pick whatever you want. So 18% of 2 billion, so that's 2,000 millions times 0.18. So you're looking at a gross profit of 360 million in that scenario. And then SG&A is roughly 6% of the sales, right? Let me just verify that. If percent of revenue, yeah, roughly 6%. So if you look at it, and don't double count here, this is total operating expenses and then selling general. These are the same. They lump everything into SG&A. So anyway, I mean it's roughly 6%, right? 6.5. So what I'll do is I'll take that 360 and subtract 6% of 2 billion. So 360 minus 0.06 times. Okay, so what we're left with is operating income of roughly 240 million. So the question is, do you think that operating income of 240 on like EBIT, let's say it's earnings before interest and taxes, okay, so you think an EBIT of 240 is reasonable for an adjusted enterprise value of, what did I say, something like, I think it was 2 billion, maybe. No, it was less than that. It was like 1.8, 1. I forgot. You can go back on the video, but that's the question. I mean, let's say I think I subtracted 1.1 billion, so it'd be 1.8. Yeah. So, sorry about that. Okay. So yeah. So 13% internal rate of return, if you will, or like 13% EBIT over adjusted enterprise value. And that's your trough scenario. So to me, this is an opportunity for a very asymmetric bet, right? That you have a trough scenario that's pretty reasonable, that, you'd be making, the company still be making roughly $240 million a year, with that assumptions I made. And maybe it's worse. Maybe I was a little too optimistic on that, but that's how I'm looking at it. And then the upside is that, holy cow, they stay maybe not as high as 900, but maybe 500, 600 million on the operating income. So now you're looking at a real undervaluation. You combine that with the short interest, and it starts to get really juicy, right? As far as like what I think from the macro tailwinds, I think those are going to be here for a while. So if you look at the Build Back Better, the infrastructure plans, the inflation reduction, all of that, combined with the increase in AI in data centers and the electrical grid rollout like that, I think all of those are huge drivers on the demand side of their products. So I just see that being like I said, a huge tailwind, and I think it's an asymmetric bet. I hope the stock goes down in the short term so that I get a chance to bolster my position, because right now it's okay, but I kind of like it to be a little bit bigger. And I hope that you enjoyed the video and that you leave a comment. Let me know what you think about this. Do you think that I'm too optimistic? Do you think the shorts are right? Are there any other companies that you think could be primed for a short squeeze, or that you just think are good value investments? Thanks for watching. I'll see you next time.